FedEx is down almost 30% from the all-time highs placed in May of 2021 at nearly $315 per share. The stock has steadily declined since then to now lows of around $200 per share, with a recent rally back up to $230. And while hints of a recession are looming, coupled with quantitative tightening, a quick broad market analysis will show you the economy has seen better days. That being said, the goal of this video today is to determine whether or not FedEx is a value investment for the future, no matter where the markets may be today, and to determine where FedEx might go from here, whether it's approaching a margin of safety or if we should completely disregard this business. Stick around to the end to find out, as we'll be talking about that and more on today's episode. How's it going? Welcome to Everything Investing. I hope you're having a great day. With that being said, today we're going to look at FedEx's Q4 2022 earnings results, where we'll do a deep analysis into the financials. We'll then take a look at the technical setups, and as you can see, we were down about 40% from those highs. And then we'll conclude with the valuation of this business to see whether or not FedEx is something we as retail investors should add to our portfolios. And if you enjoy the analysis and the value investing perspective, please like and consider subscribing for more of this content. And we're going to continue with the 5-minute trend. So let's start the clock. All right, so let's look at FedEx's stock chart here to see what's actually going on technically. And if we actually scroll out here, we'll be able to get a bigger picture and a better picture of what actually happens with FedEx. And as you can see, we have an uptrend, and that is always preceded by a downtrend. And then an uptrend occurs again, and it's preceded by a downtrend, an uptrend, and a downtrend. And this pattern continues to this current and present day, where we now just went through a nice uptrend. Now we are downtrending again. So this is actually not something FedEx investors are not accustomed to seeing. They've seen this before. It happens all the time. But yes, we are currently in this downtrend right here, and we are seeking new lows. But currently we are bouncing off this $200 price range, right? So now what we want to see is, can we break above this, let's say $240 per share level? If we can, and we can start to continue higher and start trending a little bit higher, yeah, we will start to see this price back up to where it was, just less than a year ago. If not, however, we will probably and likely see this act as another ceiling for the stock, and it will start to trend lower, and it will probably break through this $200 price range below there, and we could probably see somewhere in 180s level, I would say, as potential support for this stock. All right, so let's jump into their earnings results here. So we see revenue came in at about $24 billion for this quarter. That's up 8% year over year. That's not too bad for a business like FedEx. Earnings per share came in at $6.87 for this quarter. And keep this figure in mind, as we'll be using this for our calculation towards the end of the video, so stick around for that. And then finally, when it comes to the outlook here, they gave outlook for fiscal year 2023, and they said they're going to expect earnings per share to come in at about $22 to $24 per share, which is actually pretty strong. Now let's jump into the financials here and take a look at their income statement. And as you can see, revenue did come in at $24 billion, but let's actually look at this from an annual perspective, and we'll look at the 12 months for 2022, and we can see we actually came in at $93 billion in revenues, which is actually up 11% year over year. And when we look at our operating expenses to run the business here, they came in at $87 billion, up 12% year over year. All right, and that brings us to about $6 billion in total operating income, up 7% year over year. So as you can see, this year for 2022 has been very strong so far in top line, and it's slowly dragging down to the bottom line. However, when you actually take a look at the net income figure here, we can see this is actually down 27% year over year. We were at $5.2 billion last year. Now we're at $3.8 billion. Okay, and a big contributor to that is, as you can see right here, their total other expense last year was profitable. This year down $1.3 billion. Now let's take a look at the balance sheet here. As you can see, we have cash and cash equivalents of about $7 billion. And all I'm looking for here is to compare this to the debt. So they don't have much in the current portion of long-term debt. But when we add in their total long-term debt, we have $20 billion worth of long-term debt. And we compare this to our cash figure here. The debt definitely outweighs the cash position here. And this is actually something that I do not like to see on potential investments. I do want to see, around the same cash to debt ratio, if not more cash than debt. Now, this doesn't mean that FedEx isn't an investable business just yet. It's just something to take note of, especially if you're a current investor. Now let's take a look at the statement of cash flows here. We drag down our net income figure here of $3.8 billion. Again, last year, $5.2 billion. We add back in depreciation, amortization, retirement plan adjustments, etc., and we get to about 9.8, let's say $10 billion in operating free cash flow. We deduct about $6.8 billion in capex. So let's say that leaves us with about $3 billion worth of free cash flow to reward shareholders. So what are they doing with the $3 billion of free cash flow to reward shareholders? Well, they're paying down a small portion of debt. Last year, actually, they paid down $6 billion worth, while also subsequently taking on a little bit. So net is about $2 billion paid off of debt. This quarter, only $160 million was paid off. And then what they're really doing with the free cash flow is they're trying to reward shareholders by paying out dividends and repurchasing shares so that the shares become more valuable. Now let's take a look at our summary tab here to see what we can use for our valuation here. So as you can see, we have a growth rate of about 7.9%, let's say 8%. Free cash flow multiple, that's actually going to be about 15 times free cash flow. So that's not too bad. That equates to about a free cash flow yield of about 6, let's say 7%. So again, that's not terrible. We do look for, 10% plus. A PE ratio of about 12, which is nice and low, which means it's not too overpriced currently. And a dividend yield of about 2% while also buying back some shares. They actually repurchased about $2.2 billion worth of shares this year, and they plan to still repurchase $4.1 billion as a part of their share repurchase plan. So with all of that detailed now, let's jump into our calculator to see at what price we'd actually be interested in picking up shares of FedEx for at a margin of safety. So for our calculation here, we used $15 in earnings per share with the 10% required return. They do pay a dividend. And if we use the 7% growth rate for the first 5 years, expecting it to drop down to, let's say, 3% for the 5 years after that on a 20 PE, FedEx could be valued at about $324 per share. If FedEx can actually grow to about 10% for the first 5 years and then 5% for the 5 years after that on 25 PE, yeah, we actually can see some significant upside on FedEx's stock if we're looking at this optimistically. In the worst case scenario where the stock does not grow for the next 10 years on a 15 PE, we can see this down to 188. Now, if they can actually achieve the growth rates that they did mention in their earnings results, and let's say they can get to $24 per share in earnings, the stock could have some massive upside from where it is currently. So if we look at the stock chart here, we're already undervalued in the very worst case scenario if they can actually achieve $24 per share in their earnings. However, if they do hover around $10 to $15 in earnings, then we can actually see in the worst case scenario, we're actually at a margin of safety investment here under $200 per share, which we're actually very close to and we could potentially be at very soon. In our expected case, we can see the stock at about $324 per share, which would actually be a new all-time high for FedEx. And this is assuming, again, that they can maintain their earnings per share figures. And if they can extrapolate on that and continue to grow even further, yeah, we could actually see this stock up to $450 per share, which would actually be pretty steep from where it is. The only thing is, you do have to keep in mind this business does have a decent amount of debt on their balance sheet, although it isn't going to be too harmful. Their current cash figure is a little low for my personal liking, but if the stock can get below this margin of safety level, even then I would actually be considering a potential purchase for my portfolio, as I believe it would be extremely undervalued at that point in time. And with that, that is the analysis for FedEx's Q4 2022 earnings results. If you've made it this far into the video, thank you for watching. If you enjoy this content, please like and subscribe, and I'll see you on the next one.